Are you ready to discover the hidden gem of the investment world? Business development companies, or BDCs, may just be the investment you didn't know you needed. In this video, we'll dive into the ins and outs of BDCs, including how they work, the sectors they invest in, and the potential rewards of investing in them. Get ready to expand your investment horizons and learn about a unique type of investment vehicle that can provide high dividends, long-term growth, and access to middle-market companies. So if you find that interesting, then please subscribe to the channel and like this video to help support us in reaching more people. Make sure to press the notification button to stay up to date with new videos that will be uploaded. This is the Bullish Aristocrat. And in this channel I would like to share my investing journey, and give you all the tips and advice I wish I knew when I first started investing. Business development companies, or BDCs, are a unique type of investment vehicle that can provide a steady income stream and the potential for long-term growth. In this video, we're going to take a detailed look at BDCs, how they work, and the benefits of investing in them. So, what exactly is a BDC? A BDC is a type of investment company that is regulated by the Investment Company Act of 1940. BDCs are similar to private equity firms, in that they provide capital to small and medium-sized businesses. They typically invest in companies that are too small to access traditional sources of capital, such as public markets or banks. BDCs provide financing solutions in the form of debt and equity capital, and they also play an active role in the management of the companies they invest in. BDCs are required to pay out at least 90% of their taxable income in the form of dividends to shareholders. This makes them an attractive investment option for income-seeking investors, as they offer high dividends and the potential for long-term capital appreciation. BDCs also tend to be less affected by market fluctuations than other investment options, such as stocks, which makes them a valuable addition to any diversified investment portfolio. BDCs typically invest in a variety of sectors such as technology, healthcare, and energy. They also tend to be more diversified than traditional venture capital or private equity firms, which means that they are less likely to be affected by fluctuations in a single sector. One example of a popular BDC is Ares Capital Corporation, ticker symbol, ARCC, a leading player in the financial sector. Ares Capital is a publicly traded BDC that provides financing solutions to middle-market companies. The company specializes in providing debt and equity capital to businesses that are not able to access traditional sources of capital. It operates with a diversified portfolio across multiple sectors, including technology, healthcare, and energy. It has a market capitalization of over $10 billion and it's currently trading at $19.30 per share as of January 2023 with a PE ratio of 11.5. The company has a yield of 9.5% and it's paying dividends consistently. Ares Capital has a strong track record of generating returns for its shareholders. Over the past 5 years, the company has generated an average annual total return of 12%. Additionally, the company has a diversified portfolio of investments, which helps to mitigate risk. Ares Capital's management team has a wealth of experience in the financial industry, which is a positive sign for the company's future performance. The company's management team is led by its CEO and chairman, Kipp deVeer, who has over 25 years of experience in the financial industry. The company has paid dividends on a quarterly basis since its initial public offering in 2004. The dividends are paid to shareholders on a regular schedule, typically at the end of each quarter. The company's dividend history shows a stable and consistent dividends payments, with a slight increase over the years. The dividend per share has increased from 38 cents in the year of 2014 to 48 cents in 2023. It's worth noting that dividend payments and yield can change over time, and the company's future performance can't be guaranteed. It's also important to note that the dividend increase percentage can be affected by various factors such as the company's financial performance, economic conditions, and the company's dividend policy. It's always a good idea to conduct your own research and consult with a financial advisor before making any investment decisions. In conclusion, BDCs can be a great addition to a diversified investment portfolio. They provide a steady income stream and the potential for long-term growth. But it's important to remember that, like any investment, BDCs come with risks. It's crucial to understand the industries and sectors that a BDC is invested in and how they may be affected by economic conditions and other factors. Additionally, it's important to research the management team and board of directors of a BDC before investing, as the quality of management and governance can have a significant impact on the performance of a BDC. Also, keep in mind that BDCs are heavily dependent on the performance of the companies they invest in, and you should be aware of the tax implications before investing. Furthermore, it's always a good idea to conduct your own research and consult with a financial advisor before making any investment decisions. One of the ways to conduct your own research is by using platforms like seekingalpha.com, where you can find more details about any company, including BDCs. I hope you found this video informative and helpful in your investment journey. Thank you so much for watching this video till the end. If you found it at all helpful, then please hit that like button and subscribe to the channel to always be up to date with new videos that will be posted weekly.